Well, we told you first, and now the Torrent Pharma and Unichem deal is close to fruition. On a day like today, we've seen a 3,600 crore rupee deal that has been sealed, and it is a good time to look at M&A activity in 2017 so far. So here's a look at the 5 top headlines that we need to focus on. Nearly $48 billion worth of deals have been inked in this year. That is a significant number. This is the highest that we've seen in the last decade. So just take a look at that number. It's the highest that we've seen in the last decade. The biggest deal of the year so far is, of course, the Idea-Vodafone merger, which broke first right here on CNBC TV 18 in June of 2016. It's also been a bumper year for private equity players, with deals worth almost $15 billion being done. This is, again, the highest ever for private equity in terms of value. But cross-border deals have seen a twofold decline compared to 2016. So far this year, we've seen only cross-border deals worth nearly $5 billion. And finally, it has been the year of IPOs, with heavyweights like D-Mart hitting the Lal Street. In a total, 22 IPOs have managed to raise about $2.5 billion so far this year. So it's been a great year for Deal Street. To discuss this further, joining us today, Lahiri of Grant Thornton, Randhir, Kochhar of EY, and Vivek, Gupta of KPMG. Also with us, Ashvin Parekh of Ashvin Parekh Advisory Services. Gentlemen, appreciate you joining us here on the show. Vivek, let me start by asking you, a blockbuster year as far as Deal Street is concerned for 2017. A, do you feel this momentum is likely to continue? And B, which is going to be the sector that we should be focused on from M&A perspective?
So two things here. So, of course, the 48 billion number looks very good, but at the end of the day, actually, this number is very hugely influenced by 2 or 3 large deals. So if you take Vodafone Idea, if you take SR Rosneft, if you take some of the larger deals out, then the number starts looking more reasonable.
Right.
So that is point one. Of course, having said that, I think this has been a year where there has been significant amount of deal activity. We expect deal activity to continue in terms of consolidation across consolidation across various sectors in the industry. This has also been a year where we have, for the first time, seen a larger degree of regulatory assertiveness in deal making.
Yes.
So we've seen some deals fall through.
Yes.
And that's largely due to regulatory assertiveness. So very interesting times for the deal market at this point in time.
Oh, certainly interesting times. And I want to pick up on the point that you just made, Vivek, about the deals that have fallen through. And let me take that across to Ashvin Parekh. Ashvin Parekh, the 2 big deals in the financial space, that is the HDFC Max Life proposed merger and the $12.5 billion IDFC Shriram merger, both those not going through, one largely on account of regulatory issues and the other on account of valuation concerns. Is this going to be a space that we will see a revived enthusiasm in 2018, you think, or you know, once bitten, twice shy?
Well, we are going to see a lot of action. There are 2, 3 things which really, you know, make us say that. One, of course, we find that there is going to be a lot of M&A activity between the banking companies and the NBFCs. So, I mean, more and more, I mean, on the heels of IndusInd Bank and Bharat Finance. So, I mean, MFIs are now being examined by the banking companies. The banking companies are also looking at some investment banking kind of, you know, NBFCs. So, there is going to be some amount of activity in that. So, that's one. Second is, in case of public sector banking, you know, now with the formation of alternative mechanism, that is a group of ministers who will really in some form, shall we say, nudge M&A. So we're going to see some amount of activity over there as well, I would say.
Okay, so you do expect that the AIM mechanism the government has set up for public sector bank consolidation, that should provide some momentum, and we may in fact see something move forward there. But Raja, let me come to you now and talk about the other big story that we just pointed out for the benefit of our viewers. Private equity deals, 2017, 14.8 billion versus 8.5 billion in 2016. What's driving PE appetite in India?
Yeah, I think private equity obviously have seen some pretty large deals, but if you kind of look at the data perspective, from the numbers perspective, I think two, 3 things really stand out. I think one is some of the larger companies like your Flipkart, Ola themselves, they have raised close to $4 to $5 billion in this year. So one, there is obviously a significant kind of fund inflow in some of the established companies in the tech e-commerce space. So that's one thing that has really bumped up the numbers. I think the second thing which is very clearly interesting is the exits. I think with the flurry of IPOs that I've seen through, I think the private equity exits have been pretty solid this year. You know, some of the deals like ICICI, Lombard, Fairfax selling to Warburg, etc., kind of makes it a good round for exits. But the third important thing to note also, if you look at volumes, it's actually 20% down.
Yes.
So obviously startup activity, all of that has obviously got moderated. So that's three trends playing around is what I would say.
Okay, so you're saying that there is a softness that continues in the startup ecosystem, and which is why volumes are down, even though value looks significantly better. But Randhir, let me talk to you about the point that we just made on the IPO market. 22 companies, $2.5 billion. That's the picture for 2017. 18 companies, $1.9 billion. That was the story for 2016. We're also seeing a lot of marquee names lining up. So the IPO pipeline looks robust. What's the prognosis and the outlook for 2018?
So I think, Shereen, the prognosis is, in a word, fantastic. And if you see what's driving the IPO story this year, a lot of it is being driven by private equity exits, which Raj just spoke about briefly a short while ago. So I think private equity players are seeing this as a fabulous time to actually come out and get their exits, which may have been, in the works for a long time, and they are not leaving the opportunity, untested at this point of time. So if you look at the IPOs today, I'd say almost 60–70% of them would be sitting with a private equity sponsor who's utilizing this opportunity to exit. Now, given the long tail of private equity investments, which is still awaiting an exit, I think there's no reason why we are going to see this trend abate in the future, so long as the equity markets hold up in their valuations.
Well, the equity markets are holding up, irrespective of people cautioning us on valuations. The screen is telling us a different story every day. But Vivek, we're also talking about this NCL Tea process, and that's gathering momentum. Do you believe that that is also going to be a big driver as far as the 2018 M&A story is concerned?
Well, I think we know one thing for sure. At this point in time, the entire NCL Tea process is triggering a lot of activity. I think we still have to see whether this entire bidding process, whether this whole IRP process works out in a way that genuine third-party deals can happen for these distressed assets. But most certainly, NCL Tea is acting as a trigger for a lot of deal activity in this space. Companies that could potentially have had to go to NCL Tea are now looking more aggressively at divestitures of non-core assets. Companies that are in NCL Tea are being looked at by multiple bidders. So at this point in time, what one can definitely see is it is heightened activity in the market.
Heightened activity in the market. But Ashvin, Parekh, let me come back to you, sir. You're hopeful that we will see action on the PSB consolidation front. But outside of that, let's talk about the insurance space. We saw one big deal that didn't go through, which was HDFC Max. I was speaking with the Standard Life Global Chairman, Jerry Grimstone, and he said India has too many insurance companies in comparison to the global average. Do you see that that is likely to be a potential area of significant consolidation?
It is. I mean, if you look at, two different sectors within insurance. If you look at life insurance, you'll realize that out of 23 odd players we have now in the industry, the last 7 or 8, were looking for good valuation. They were looking for benchmarks, to get into some kind of M&A activity. Now that the benchmarks are getting established, we've seen, of course, a flurry of very good companies coming to the market, but let's say the market will evolve benchmarks. So we're going to see more transactions, particularly in life. In general insurance, once again, the capital may not be a trigger, to really force M&A.
Right.
But what would trigger, perhaps, is in some form the opportunity that is now coming up in general insurance as well. A lot of transactions I can see. At least 2 to 3 in 2018 in life, and about 2 to 3 in general insurance as well.
Okay, so you do expect action on the insurance front. Raj, let me come back to you. CrossBorder Deals at $5 billion. It's seen a twofold decline since 2016. Do you expect that trend to continue?
See, if you look at Shereen, clearly I think the key thing that is getting played out is consolidation. So if you look at the overall deal momentum, a lot of domestic deals have happened. So clearly from a state of economy perspective, consolidation is the key. I think the second key thing to look at is the kind of cash is important. So there is a little bit of liquidity kind of concern overall. So clearly because of that, the outbound transactions clearly have taken a knock. I think the second important aspect is obviously from an inbound perspective, we've seen some slowness. And my perception is that depending on the sectors, sectors like tech, pharma, healthcare, I think we'll continue to see some good activity. But deal closures, I think, continues to be fairly difficult. And I think unless the overall cash liquidity situation improves, I think the outbound activity will remain moderated in my view.
Moderated. Randhir, I'll give you the final say. A quick word on where valuations are. For the stock markets, everybody's talking about irrational exuberance. But as I pointed out, we're touching new record highs practically every day. What's the story on Deal Street?
So, Shereen, unfortunately for bankers like us, when the capital markets are as bullish as they are right now, life becomes tough to conclude transactions because these valuations become the benchmarks for any seller who is looking at exiting at this point of time. So valuations are at historic highs. I think it's made transactions very, very difficult to close. So you'll see transaction life cycles have got extended dramatically. We are seeing 6 months, 12 months, 18 months to close transactions because of valuation mismatches. So I think there is a big overheating in terms of valuation expectations, and that's really affecting the M&A market in a very significant way. Having said that, the long-term prognosis is attractive. There are enough themes like consolidation which are playing out, and those are overcoming the valuation challenges and ultimately resulting in a very healthy M&A market, which is very evident in the numbers which you laid out in the beginning of the show.
All right, so the future continues to be bright. As Vivek pointed out, that's a significant number there on your screens, the best on Deal Street that we've seen in a decade, but it also accounts for 2 or 3 big ticket deals. And if you take those out, that the numbers would look much more reasonable, as Vivek pointed out. But the story continues to be positive. Vivek Gupta, Raja Lahiri, Randhir, Kochhar, and Ashvin, Parekh, always a pleasure. Thanks very much for joining us here on CNBC TV 18 on this special discussion here on the year that was for Deal Street.